Hey everyone, and welcome back to Money Journey. JD just reported earnings this morning, and the stock is up 5%. Is this good news for JD investors and investors on the Chinese market, or there are more bad news hidden in this earnings report and in the next few months after these tariffs announced in April? Let's dive deep into this latest turn because there are a lot of information that can be important both for JD investor and for investors that like to invest in Chinese companies. First, the stock is up 10% year to date, but down still 16% from its March highs. JD announced that they start to invest in food delivery business to compete with Meituan, for example, and investors didn't like that. In my personal opinion, I didn't like as well because I don't like Meituan business. For example, they paid a dividend of Meituan shares, for example, and when I received, I instantly sell that because I don't like that business. Low margin business, very volatile, and I think investor doesn't like as well. That's why the stock is down 20% after that news. But right now, we are focused on this earnings report and what we are seeing in the news. We see JD stock is rising. How China's economy rebound boosted earnings. First, this earnings report is to the first quarter of 2025, or it ended 21 of March. So tariffs were just implemented after April. So we don't see these tariffs into this earnings report because it was before when we saw, at least from the report, Chinese economy was rebound. We see very good results from the previous quarter, and we are seeing in the news that Chinese is starting to recover. So that's what we see in this report. Better than expected results as rebounded consumer spending in China boosted the online retailers' top and bottom lines. Bear in mind, JD is a very important company. It's one of the biggest in terms of sales, for example. I don't know which has more revenues, for example, if it is Alibaba or JD, but they are pretty close. So the volume we see in sales from JD is pretty close to Alibaba, even though it is a smaller company. So in terms of revenue, they grew up 16% when you compare year on year, which is real good news. I'm expecting JD to grow between 6 to 10%, but seeing them grow at 16%, it is very good news. And I really like this, even though earnings it was not a bit, earnings was below expectation, but we see revenue starting to improve, which is very good news. Let's look into the announcement. We see net revenues grow around 16%. Net income, when compared to the previous quarter, it was higher, which is very good news as well. When you look to the net income per share, we see growth as well. So very good news. Uh, Words from the CEO from JD. We saw a strong start to the year with solid results on both top and bottom lines in Q1. Our performance was supported by improving consumer sentiment and continuing enhancements to JD's supply chain capabilities and user experience. The biggest moat on JD is there. We see them selling a lot of brands that Chinese consumer likes. We talk about their supply chain, which is one of the best in China. It's probably even better than the Alibaba's one, Cainiao. User growth was particularly strong during the quarter, reflecting the increased trust and mindshare JD has earned from consumers and further strengthening our ecosystem. We are also seeing encouraging signs from new initiatives, and we believe these emerging opportunities will further position us for the long-term high-quality growth. In the first quarter, both our product and service revenue achieved double-digit growth year on year. We see growth from the selling of their products and their service revenue growing above 10%, really good, and diversify revenue streams. Further accelerate our sequential basis, while our bottom line also continued to expand steadily. One thing I really like that we are seeing on JD, their gross margins are increasing, but their net income and free cash flow are not growing as much. We are seeing them investing uh, to enhance competition to other companies like Alibaba or Pinduoduo. So they are invest, and we are seeing their margin, net income margin or free cash flow margin, uh, lower than what we can expect. So when they mature or they continue to grow and the economy recovers, I'm expecting, at least for me, better margins, and it's what I'm betting. Another big update, it's the share repurchase program. The company approved a $5 billion new buyback program until 2027, and we are seeing that they repurchased an equivalent of $1.5 billion from January 1st until this announcement. This means they still have 3.5 billion to do buybacks, and with this 1.5 billion dollars spent on buyback, they bought back around 2.10% of the company in just one quarter, which is very, very, very good in my opinion. So this is probably the best news we see in this earnings report. Then we see new business. They talk about food delivering. I don't like the business. I'm being honest with you. But if there is a company on China that can make food delivery business a profitable business, it's JD. They are very good on their how could I say, supply chains management, for example, and they are used to work with low margin business like JD. So we might see that turns into a really good business, but I'm not investing in JD because of that. Of course, there are better qualities in this business, and it is something that I'm not very enthusiastic. So in terms of JD, let's look into it. It was a very good earnings report. Good news, it's Chinese consumer confidence, it's growing, at least in the first quarter. We have to wait for 3 more months or 6 to see what was the effect of tariffs in consumer confidence. It will be very hard to predict that, but right now we are seeing the first quarter earnings report, and it was a very good earnings report from JD, and we can expect very good earnings report for Alibaba and even Pinduoduo, for example. So at least it's my expectation and what we can expect if you compare to JD earnings report, which is very good news. JD remains one of the best quality companies in China. When we look to our money on the checklist, the only checkmark we don't see it's their margin, but I compare them to Walmart, low margin business but growing steadily, very defensive company. Bear in mind, even in 2022 when earnings were going down and revenues going down for most of Chinese companies, they still grew at 4%, and they are expecting a very good and healthy growth ahead. Look at the graph when you compare revenues and free cash flow, growing very steadily. We don't see down here. So it is very good, very stable and defensive company, which is a really great quality. And this quality comes with for because they have lower margins, for example. So when you look to technology companies, for example, they have higher margins, but they are easily disrupted. JD cannot be disrupted because it's very hard to compete with JD, but they have in good growth, low debt. When I was buying JD at the 20s, I have videos on my channel talking about their cash position. JD was worth around 23 billions. It was a double from that point to when you compare to right now. And their cash position, the cash they had, it was equal to the market. Basically, you were buying JD for free, their JD business for free, because you have that cash, the same cash amount you pay, you have that in cash, and you have more cash than long-term debt. Very healthy balance sheet. Their returns are very good, even higher than Alibaba's. You don't see that a lot from lower margin business, but they are very good, and the reason for that is their management. For me, it's one of the best management teams on China, and it's one of the reasons I'm investing on JD because of their management team. Uh, Probably only Tencent's management team is better than JD, and even then, they are very good management teams, and that's one of the reasons I like and love JD. Uh, they have a wide moat, their network effect, their business, their e-commerce business is loved by Chinese consumer. They're having free cash flow positive. They are returning plenty of capital right now. Bear in mind, they started doing buybacks last year. They bought back 3% of the company, and in 2025, in just one quarter, they bought back 2.8%. So this is proof that their management team is very good. They are seeing that they are trading at a lower valuation, and they can have a lot of returns for shareholders if they are buying back the share. That's why they are doing, and still they pay a annual dividend that is around 2.5%, which is a very good dividend, and it's growing year over year. So when you look to these graphs, all good, revenues going up very steadily, free cash flow going up as well, gross margins improving, very good, return on investment, even though it was down in previous years, they are starting to recover. This year it's around 15-16%, so if they can continue to improve until around that, I'm very pleased with 15% return on investment from JD, which is very good. Shares outstanding, they were issuing shares, but right now they are doing major buybacks, which is very good. And when you see free cash flow per share steadily grow, this is the perfect graph. This is what we love to see in a company. Free cash flow per share going up very steady. And with this Chinese economy recovering, JD doing a lot of buybacks, I'm expecting this free cash flow per share continue to grow at a very good pace. So that's probably my thesis on JD. In terms of value, I have made discounted cash flow. I will not talk about that because I have plenty of videos about that. I'm expecting them to grow, in my base case, only 5 to 4%, only a PE of 50, even though they deserve probably better. In terms of margins, their previous free cash flow margins are around 3.5-4%. I do really believe they can have 4%. In bad years, they can have 3%. If they continue to improve, Chinese economy recovering, they can have easily 5%, which is my bullish thesis. So with this assumption, I came with an intrinsic value of $62. Right now, they are still trading far below that value. So even though it's not a high margin company like we like to see, there are plenty of good qualities in this business, and it is a company that I love their management with, and right now I don't see any reason to sell my shares on JD. In terms of valuation, if I was not an owner of JD, this looks like a very good opportunity to be a core position in my portfolio. Right now it's already a core position. I'm not interested in, since I'm already a shareholder, this could be a position, a valuation, which I could have a position between 3 to 5%, which I already have a core position, so that's why I'm not interested in buying this comp. But if the valuation was far below, I'll be interested in adding more because I really like, and there are plenty of good qualities in this company. So that's my opinion. That's the earnings report reaction of JD. Plenty of good news for JD Invest, and even plenty of good news if you are watching Alibaba earnings next Thursday. So I hope you like this video. See you in the next one.
This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.